Good evening and welcome to the Accendo Traders Group. This is our technical analysis trade plan for Monday, November 17, 2008. AccendoTraders.com, effective trade plans delivered daily. And each night, as we work on our trade plan for the next trading session, we want to go over our watch list and set stops and alerts for our new trades. But more importantly, we want to see what's coming on the pipe as far as market moving news, economic calendar, earnings calendar, upgrades, downgrades that can affect our trades so that we can prepare ourselves. We want to look at our three major indexes, always scan for new trades, set alerts for those new trades. And we want to make sure we have time to spend with our families and have a life. So let's look at what happened today. Right off the bat, we had this town hall meeting with the CEO of Citigroup, and they pledged to cut more than 50,000 jobs, or 14% of their workforce. We had industrial production come in larger than expected. Lowe's warned that the consumer will continue to delay their home improvement purchases, and Target suspended their share purchases. Now they met earnings, but they were as a part of the share buyback plan. They decided to suspend that for right now. Japan officially fell into recession today. First time since 2001 when they joined the Eurozone. We had 10 out of 10 major sectors in the negative territory. Now that's tells the majority of the story. When you look at all the indexes in down, the market continued to be very volatile today. It was up and down, up and down. And once again, the market sold off in that last hour time frame. Yes, everybody ended down, but it certainly was a wild ride for anybody that was looking at it intraday. On the earnings calendar, the only really important thing we had today was Target. And as we said, they did report inline earnings. However, they did suspend their share buyback program. Upgrades, we have Yum and McDonald's. So Pepsi, and we had McDonald's getting upgraded. And on the downgrades, we had Alcoa, Abercrombie and Fitch, FCX, MTL. So we had some retail and steel stocks getting downgraded. Tomorrow, we've got core PPIs. We've got some economic data coming in. Nothing huge. And we do have Home Depot before market open. So we had, Lowe's kind of warned today. Home Depot will probably follow that up with some information today about whether or not people are doing home repair projects on their houses. Nothing really going on after the market closed, and we're not watching anything on the splits calendar. So let's go and take a look at our three major indexes. I wanted to start off by quickly just showing you our breadth indicator. All of them are showing 25% of the indexes are showing buy signals, but they're all showing weaknesses. We broke through the indicator, and so we are definitely no longer in a buying signal. We are definitely showing weakness. As we continue to look at our three major indexes, we have the Dow, and about 2 weeks ago in October, we were talking about this symmetrical triangle right here. We're showing that we have resistance here, we've got support here, and we did break up a little bit as we ran to the 50, and then once we crashed back below the support level, that should have been your indicator to say, okay, the market is losing strength, more importantly, that the market is weak. Well, now, as we talked about last night, now we're looking at this descending triangle. We've got the support around 8,200. This is our closing low support, not our intraday low support. But what's important is that the buyers came in and said, good price, let's bring it back up. Buyers came back in here and said, good price, let's bring it back up. We need those buyers to step back up and say it's a good price, or look out below, grab your floating device, and smoke them if you got them. We're not close to any of our long-term major averages. You can see that our bands did spread lower. Not a full squeeze play, but our bands did spread lower. We're already pushing through our acceleration bands. The snapback down that we talked about last night did come through today. Our linear regressions holding up support, so we need our buyers to step up. And our TSVs are, for the most part, angling down. We do have a couple heading up. So again, there is some hope that our buyers may be stepping in the afternoon tomorrow. But we need our buyers. Let's go take a look at our NASDAQ. Now, what we talked about yesterday with the NASDAQ is that the NASDAQ's leading us down. As I zoom in here, you can see that we're already below our support of our closing low, or more importantly, our gap down and rise up. Here's our closing low, but we're not below our intraday low. But we're below the support, so it makes sense for us to go down and test this. Now, both on the Dow and the NASDAQ, you can see that our volume is not great, but it's nothing to laugh at either. So you can see our volume is so-so. Again, nowhere near any of our long-term moving averages. ADX is strong here, above 30. That's always a good trend indicator. Obviously, our trend is down. We're already through our acceleration band. Snapback down has come through. Linear regressions, we're at the bottom. We need to bounce. And this one, we pretty much have all of our TSVs hanging lower. We do have one heading up. So again, will our buyers come in and step up? Finally, with the S&P 500, also already closer to the support level. We've got our intraday low that we're trying to battle here. We need our buyers to come in and say it's a good price, or we're going to head lower. It's just as simple as that. Our pattern is going to play out. Again, ADX is strong. We pushed through our acceleration bands. Snapback down did happen. Linear regression, will it hold up as support? And you can see linear regressions hasn't even really held up as support here. So it's easy for us to push, especially to test this November low. And our TSVs, for the most part, are all heading lower. So let's go ahead and move on to our education portion of our video. Okay, and as you guys know, I like to end our videos with an education session. We're using the book Trading in the Zone by Mark Douglas. We're on chapter 4, Consistency, Thinking About Trading. And as you guys know, who've been with me from the beginning, know that I'm all about developing trade plans. And a part of that is having the right mindset. To be a consistent trader, you got to think about the market. It's not just as simple as market knowledge and technical analysis, technical indicators. If it was that simple, we'd all be making money. But we're all not. As we've been talking about, most people lose money. Well, why is that? Well, it's because A, they don't have trade plans. They're just trading the trade. And B, they don't understand their interactions with the market. They haven't yet developed the right mindset. And it's not even just about trading. I mean, you can carry this over to your life. You know, winning in life, winning in trading is about a state of mind. It's about being happy and having fun. It's about understanding that, you know, life goes on. So Mark goes on to say that your state of mind is a byproduct of your beliefs and attitudes. If you believe the market is out to get you, if you believe the market has a vendetta against you, then you know what? That's what you'll see. You know, it's sort of like when you're in a relationship and your friends are telling you the man or female is no good for you. Well, you know, that's because your love or whatever is blinding you to the truth. Or it could be that you have a good partner that you're with and your family members hate them because they're either jealousy or maybe they've had a bad experience with that person. It blocks that out. And, you know, no matter what good that person does, they only see the bad. So it's all about your state of mind. And if you have the right mindset about the market, that it's an interaction, it's a give and take, you win some, you lose some. Cut your losers, let your winners run. Have a trade plan to make good trades based off rules and conditions and not off your best friend's websites. And again, as I always say, it's not just about following me and being a subscriber to my videos. It's about having my videos and having that be a part of your trade plan so that you're making educated decisions for yourself. But more importantly, it's about you having the right mindset about the market and not seeing it as a source of pain, but as opportunities over and over and over again. I mean, even this period of high volatility, the market is up and down, you know, but there's still plenty of opportunities, and you just have to get over the hump of your past loss and look at the next opportunity as your future winner. So if you depend on your outside conditions, if you depend on the market to give you winners, then it's going to be hard for you to be happy because the market doesn't really care about you. So, as you guys know, we've got our 30-day challenge going on here. A 30-day challenge at AccendoTrading.com. Great place for you to learn how to develop your own trading system. We've got all these videos on how to set up your indicators, how to look for trading chart patterns, how to set up your trade plans, some great videos. We've got a great forum, 30-day challenge at AccendoTrading.com. If you're ready to become a paid member of our daily trade plans, this is just an introductory video, but we've got our picks that are not included in this video. So Accendo Traders landing video.html. If you want to get our picks for tonight, there's where to go. And as always, check out our blog, Trade Your Own Risk, guys, and I will see you tomorrow.